Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Connon.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors, and a happy new year to everybody out there. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep 2017, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel here with Joel Elconin. Dennis Dick was with us and had to leave because his kid is very, very sick, so feel better, Spencer, other Spencer, but the show must go on, so we are still here. Joel and I got you covered this morning. Two guests for you. Our first will be at 8:15. That is Efim Hoffman. He is the CEO and founder of Running Alpha Capital Markets Intelligence. Always has some good alpha plays for us on the show. And then, of course, it's Tuesday, so that means 8:35. We're going to be joined by Nick Shaheen. But in the meantime, we have some Trump-induced moving this morning in the market. We're going to talk about that and the oil rally. Also about the light volume day on Friday and what we're looking for as today is the first day of the year, so we're all kind of in wait-and-see mode to see what happens when the market opens. Joel, how was your New Year's weekend?
Well, it didn't get off to a great start on Friday night with Michigan.
It did not.
No, it did not. It didn't get any better on Sunday. Well, the football team lost on Friday. The basketball team lost on Sunday. But the S&P futures are trading up 16.5 points. All is good in S&P land. We hit a pre-market high of 55.25. That's above Friday's high. I don't know. I'm not even going to give you a number above 55.25 because I don't think it's going above 55.25. Crude trading at, I don't know. I think we've been at $55 in the crude since, I don't know, year and a half here. Maybe back in 2015, at the end of 2015, we're up here. So rallying off, Spoo's moving off a rally in the oil patch. Gold down $2, silver up just a nickel.
All right. I know Dennis was saying to do this a few weeks ago. I only just did it this morning, though, and I've officially now added Donald Trump's Twitter account to my tweet deck, so I get an entire column devoted to him, so I can always see what he's up to, because he's been on a roll since the new year, tweeting about the Chicago murder rate, tweeting about North Korea and their nuclear weapons, tweeting about China, and then this morning, tweeting about GM, saying GM is sending Mexican-made model of Chevy Cruze to U.S. car dealers tax-free across the border. Make it in the USA or pay a big border tax. Very interesting article, actually, 2 weeks ago from the Washington Post that detailed Trump's relationship with GM. He had his own Trump series of Cadillacs back in the 80s. Didn't criticize GM on the campaign trail at all. Did criticize Ford. So this is a little bit of deviation from the previous strategy or previous relationship indicators. But nonetheless, Trump tweets about GM, and Joel, what happens?
And it goes down, and boy, oh boy, I mean, this is just, reacting to him on Twitter, knock a stock like GM down. Quickly recovered, though. Let's take a look at the pre-market low in GM. 34.22, right back up at 34.70. Big day for here in GM, and I'll just give you Dennis says, don't give too many numbers. Well, I won't. I'll just tell you that the low from Friday, which was 34.67, coincides with 3 or 4 lows going back earlier in the month. So 34.50 is a big number. Was over $37. Now getting a little bit of a pullback. A little bit more of a buyer than a seller here in GM. Nice pullback off highs.
When will it end, Joel?
When will it help the Twitter stock is what I want to know.
Well, I don't know. Good question. But we do have a Twitter rating today. I think we have a price target I'm seeing. I think I saw it was $14 from Aegis. So I think I saw this on Twitter, actually. So Aegis with a $14 price target on Twitter. What's it at now?
It is trading up 11 cents. Don't try and get me bullish on Twitter right away here. Twitter, we'll just give you the levels here on Twitter. You got a series of 1, 2, 3, 6 lows at the 16 and a quarter area. That's support, whatever longs I'm holding. It cuts out, closes under 16. I'm getting rid of it, but I don't know. Ridiculous call here. Downgrading after. Why don't you downgrade it at 1950 instead of 1630? But for me, Twitter is still sitting on support.
When will Trump's tweeting help Twitter? Don't know. But looks like this will be the new normal now. Is keep that Trump screener on because you never know what he's going to be targeting next.
How many people do you think he has advising him on these tweets? I mean, you think he's just coming up with this stuff on his own?
Well,
or?
My new theory as of like a half hour ago is that he gets briefed on something for like the first time, and then tweets about immediately afterward. He tweets about what he was briefed on. I don't know. That's my thought. Let's move on, Joel. Tell us what happened in oil or what's happening in oil this morning, because you were talking about that on Stocks and Jocks this morning in Chicago, and I want you to elaborate a little bit more on this rally.
Just renewed optimism here that these OPEC cuts, I mean, for me, that's the reason the market's up. I'm looking. There's no earnings, no major rating changes. No one's saying that the market's going to 25,000 this year. And you just had, you got a nice rally back over $55. Cleared haven't quite taken out the high of the move here. Let's keep an eye on 55.44. Current high is 55.24. So just rallying on, following through on the OPEC cuts.
And the rally in general on Friday, it was a light volume day, but
in crude?
Or in the market. Or no, I'm sorry, the sell-off on Friday.
You know what? Just light volume, little end of the year tax selling. People are like, hey, I'll just book some profits and just knocked it down. So I just attribute it to a light volume sell-off here, getting the rebound. Just people saying, okay, this has been a wild year in the market. We had the Brexit, the Trump victory. A lot of people just say, I'm getting flat. And let's see what happens with the January effect.
All right, we do have a lot of ratings today, but it does seem like most of them. Granted, it's been really quiet now for the past 2 weeks, as it is every year at the end of the calendar year. But it does seem like every rating today is like a neutral. It's like an upgrade to a neutral or like a downgrade to a hold. And I'm not too excited about any of them. There are a couple that may be worth mentioning. J.P. Morgan upgraded Boot to a buy. They raised their price target there to $15.50. That's BOOT. But I mean, gosh, not a whole lot of it. Nothing.
What is that? What is Boot Barn Holdings?
I don't know.
Is it shoes?
That's what I thought.
Yeah, I think so.
I mean, if the ticker is Boot.
Boot Barn Holdings, all right. It's got support here at $12, a gap between 11 and 12. I don't think I'm rushing out to add this to my portfolio here on the JP Morgan rating. Not even doing anything in the pre-market. So still like it closer to 12 than buying it off a JP Morgan rating change.
Wait, a quick question about GM, if I can go back there for a second.
Sure.
I don't remember, like, I guess in the past, whenever Trump's tweeted about something, we've seen it close, we've seen it rally.
It's been a fade.
Yeah, and then you can. So I'm pulling up my chart on my screen now to look at the 1 minute, but it looks like this is something. It's already back to where it was.
Exactly.
So
yeah, I mean, it's just. We had the Boeing tweet a while ago, and now let's see where that thing's at. I remember it dipped under 150 that day and closed. Let's go back to the daily charts because I remember the pre-market trading. It didn't even get there. Yeah, the Trump tweet was right here when it went to 150, rebounded to 160. So don't think too many of our traders here making big moves off the Trump tweets. At least I hope not.
Did you read your Barron's this weekend? Yeah,
I did, but I read it like on Saturday. That seems like a month ago.
Yeah, I was going to say you had 3 days to read it. So let's go through some stocks.
Sure.
Let's see what we got. Okay. Let me see here. As usual, pretty dense information. Let's start with PNC. They said PNC is one of their top picks for the year. Steady income stream and solid loan growth strategy there at PNC Financial Services Group.
Wow, another 15% here. Wow, that's big rally, the Trump rally, along with the rest of the financials. Maybe 15% here. I just have a hard time buying it here till we actually see what what the Fed's going to do. I mean, interest rate hikes. I don't know how many are figured in. We will talk about that with our first guest at 8:15. Evan will talk to us about that. But man, oh man, highs in the move here are 118.57, 118.52 to 118.57. Just up on a Barron's article. I mean, I'm not going to get super bullish here until we take out series of highs at the 118.50 level.
And then a couple of distressed European plays, Novartis and Unilever. So let's take a look at those guys.
All right, let's take a look at Novartis here. Rebounding. See, this is at 80 hours, so you get all this gappy action here. Trading up, made a low at 66.93. I'm not sure people can even remember. Not much trading going on in the pre-market here. For Novartis and at NVS here, I'd like to pull back to the $72 level. Series of lows and highs right in that area. That's a key level, 72 and just above 74 on the upside.
I think Barron's may be listening to Tim Melvin because they got some love for some community banks, BNC Bancorp, BNCN, and Raytheon was a defense stock mentioned as well. But they do like community banks, so maybe they're reading the Tim Melvin D-value letter.
Looking at BNC Bancorp, 33.05 has been the high of the move. Tim has been very good with some of his picks. What was the stock that Dennis bought when he was on this show? Remember?
Oh, man, I can't remember.
That was only 2 weeks ago.
That might as well have been 2 years ago. We talk about so many stocks. I can't remember who bought what.
What was there was another one he wanted. What was that stock that got hit on the fake news? Bank of California. Remember that?
Yep.
Wow, look at that. Down to 10.93. I believe we had Tim on after that, and he still liked the company. Just if you're a fader here, I mean, you don't always get lucky buying these big red candles here, but when that news came out, it's been quickly faded here. Of course, you've had a rally in the sector as well.
And then let's look at Raytheon. Defense spending, obviously, a hot topic under the new administration, but RTN got special mention in Barron's this weekend, so let's take a look at some
You know what kind of scares me? Remember, who's that guy that we had on that focuses on devices?
Oh, Andrew Zatlin.
Yeah, Andrew Zatlin.
We should get him back on.
And remember what he said about ramping up all these defense, Trump talking about all these defense stocks and ramping it up. You know what that's a prelude to?
No.
War.
Well, duh.
Yeah, I mean, it's just a question of when this guy's going to get us in some trouble here. But Raytheon has been in a quiet consolidation period here. Almost filled the gap from the back in early October. That was or late November. That was before the election. Major resistance at 145. Support here. Just tight ranges here. Consolidation between 142 and 145.
Is Allergan out this morning? They're not really, but they did have some positive news. They announced FDA approval for one of their breast implants. So if I was looking at the chart, didn't see it. Maybe offered it up or bid up. Sorry, but not a whole lot there. But did see that approval go across the wire.
I noticed that stock ended the year with like a 1, 2, 3, 4, 5, 6 day rally. A stock that was really beat up last year. At one point, it was going to be taken over by Teva Pharmaceuticals, I believe. That's when you hit 340.33. The deal didn't go down. This is one I may be looking to add to my portfolio here. Maybe get it back to the $200 level. Stop myself out if it takes out those lows at 182.
Okay, it's 8:14 now, and we have to bring on our next guest, and he's made some calls on our show in the past. Not afraid to make calls. That's Efim Hoffman. He is the founder and CEO of Running Alpha Capital Markets Intelligence. He's going to discuss some best-in-class alpha ideas in infrastructure, regional banking, and some special situation mid-cap value opportunities. And maybe we'll go over some of his previous calls he's made on past appearances. So we'll be right back in a minute with Efim Hoffman.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Spencer Israel today, and we got Efim Hoffman on the line. He is the CEO and founder of Running Alpha Capital Markets Intelligence. Efim, how does it feel to be the first guest of 2017 on Benzinga's Pre-Market Prep?
Well, it feels pretty refreshing. I'm glad to be on.
All right, so before we get into 2017, how about telling me, if you need one word to describe the markets in 2016, what would that one word be?
Rocket ship.
Okay, all right. And how will that translate into 2017? Why don't you start out with some of your themes in the new year?
Yes. So I think some of the big themes this year, which are quite obvious, the only thing is the dispersion within each sector or each industry or any given theme to be doing stock-specific work. And I found that most of the ideas are in the small cap and mid cap value space. So the themes are, the way I see it, with interest rates at least on the rise over the short to intermediate term, as well as like a drop in some of the regulations and tax benefits, it looks as if you're going to see regional banks doing exceptionally well as their net interest margins start to improve. So two or three names I could throw out there is M&T Bank, Fifth Third Bank, the symbol is MTB, FITB, and also I still think there's quite a lot of room to run in Bank of America. I believe this is a secular trend in these three names that should do well as we progress into the at least into the middle of the year.
So how do you play these? I mean, for me, a guy that's afraid of heights here, let's just go to Bank America. That's the most liquid of these stocks. Big move up here. I mean, do you put a little money to work here and then, thinking that, a temporary top, and then have a little bit of, ammunition if it goes lower? Because a lot of these stocks, and even MTB here, I mean, if you're not already in.
FITB is my favorite one of all.
Okay, how come?
Just the structure and how long the way it consolidated off the low, and the depth of the drop, it just completely cratered in 2009. It's almost next to nothing. And right now, at least in terms of my work, the major breakout point was at the $23.95 area, and it's only at $26.97. I did have a lot of short-term signals at 18, but I think as a intermediate and a long-term investor, I would be looking to hold this name. So if people do have this name in their portfolio, I would hold it, and if they don't have it, I would look. And if you're a trader, now here's the thing. I always look at what is the maximum likely, if there was some kind of major correction, even if it was like a one-day wonder, kind of like what happened before the election results. Let's say you were to push back from the 26.97 area back into the near the breakout area of 24.22. That would be what you should look for, is any kind of short-term buy signal. It doesn't matter what strategy you use. I believe any strategy, if you pick the right kind of trending stock, they'll tend to do really well. So if you get, say, on a 34 or a 60-minute chart, a buy signal coming in anywhere in the 24.25 to 25 handle, I would go buy there, and I don't see really any major risk at all. I see the next major move up as the 34 area is the next push up on this one.
Now, I like the caveat that you put in there. Interest rates seem to be on the rise. Now, you had a perception in January of last year that the Fed was going to hike 4 times. Turned out to be once only, and that was in December here. These predictions that you're talking about, to prove the loan margins, is this based on, 1 more hike, 2 more hikes, 3 more hikes, or what if they hold steady for the remainder of the year? Do you still like these issues?
I still like these names, regardless of whether they hold out. There's a lot of things percolating in the economy. Like, when I like looking at a few other indicators that tell me that things are actually improving. And the number one indicator that I look at is the chemical activity index. And, just looking at the individual equities within the diversified chemical sector, which pretty much is a leading indicator of manufacturing activity. And also, with the likelihood of regulations being eased quite a bit, that's going to be a lot better for regional banks that are trying to grow beyond a certain, height, because there's a lot of regulations and costs when you get above a certain barrier of capital under management. So I think that's going to be very helpful to banks like Fifth Third and M&T.
And what is that chemical index that you mentioned there? I don't have the symbol on that one.
Oh, well, I mean, I kind of made a proprietary index of different chemical companies, but there is a chemical activity index. I don't actually look directly at those specific numbers, but I do know that if you were to look it up, it's...
Give me some stocks then. Give me some stocks in the chemical
I'll
sector.
give you some stocks in that space. One that I like a lot is EMN, so Eastman Chemical.
Okay.
I think it's a tremendous value play, and it's got a lot of room to the upside. Another one that I like a fair bit is LYB, Lyondell, and they also paid some pretty significant dividends.
All right,
So I like that one.
Okay, and expand on your theory here with the move up in the chemicals and the implications for the overall economy.
Well, the thing is, like the chemical sector, almost every product that gets made, about 98% of almost everything starts off with chemicals. You need to have chemicals in order to produce those products, and historically, you don't get major breakouts and improvements in the chemical sector without having some forward action in the equity markets following. So I think there's a lot of activity that's not yet registered in some of the economic numbers, and I think that's going to show up probably within the next quarter. So another area that besides that area that I think is going to be great for this year as well is going to be the energy sector. It's been really, really hit hard. And, a lot of people keep on talking about, well, what if, we break out of the 54 and it fails and we come all the way back into the 40s again or the 30s or worse. And the thing is, at the end of the day, regardless of whether OPEC, what OPEC does, there's still going to be a lot of need in the energy servicing area and also in the energy pipeline area, like midstream pipeline players.
Give us a few symbols. Give me a few symbols in those areas of the.
Well, I mean, okay. Well, in the energy space, I would say something like HP, which is a contract driller.
Helmer.
I would also say something like William Partners, WPZ.
Okay.
Those look rather interesting to me.
Yeah, those charts are looking pretty good. How about sectors to avoid here in 2017? I mean, if you're looking for a rising interest rate environment, I mean, if you're loaded up on utilities, getting those dividends, is that one sector that you might want to avoid, or still stick with that?
Yeah, I mean, when I did my analysis on it, I didn't see too many names in the utility area. There were names like in almost every sector, but like on the bad ones, there may have been only like just because there was a few special situations in the value space. But the average investor going into the utility, yeah, you want to stay away from areas like that and focus more on the areas I discussed, as well as engineering and construction. I mean, there's going to be a heck of a lot of infrastructure development, not only in the energy sector, but also in the need for securing the facilities, also for in the water, utility sector. I think that could do well. So any kind of engineering companies that are going to be making improvements in that area, and that's going to require a lot of steel. It's also going to require a lot of heavy machinery and industrial equipment. So I think some of the best ways to play it would be to think almost like do second level kind of thinking, like buy the picks and the shovels that are going to actually be the ones that are going to profit off of all this activity. So I would say anyone that actually services machinery equipment or actually provides the equipment in order for these this building to take place, I think they're going to be the big benefit.
Are you talking about cat and deer, or are there other issues that you have your eye on?
There are a number of other areas. There's one name that really stands out to me is AGX. Looks interesting. TEX looks interesting in that area.
Okay. All right, moving on here. Do you see in the mid-cap any special situation mid-cap volume opportunities?
Well, actually, I think the best opportunities in the mid-cap space cover all those areas that I just talked about, and most of them are that are going to do well are ones that are U.S. centric. So that so if there are policy changes internationally or geopolitical changes, that companies that are going to have less risk are going to be ones that are getting, let's say, most of their business out of the U.S. And that's why I think that some of these names that I've already mentioned are in the mid-cap space, and especially the mid-cap regional banks. Those are ones that I think are going to benefit tremendously. If I had to pick one area that's going to do the best this year, it would be the regional banks, and in the energy sector, I would say an easy way to play it would be like the OIH for in the services area, and also I'm very, very bullish on the prospects of LNG. So liquefied natural gas. So I think a company like Cheniere Energy, LNG, I believe the timing for that is probably somewhere like in February if we break out of that trading range that we're in. And I think it could be it could be like 50 to 70% upside on that one. So,
all right, we'll keep
but I wouldn't get in until it breaks out, but I think it will at some point.
And where's your breakout point? At 44 here? I see we bumped up against that in September.
Yeah, I'll let you know in 1 second here. I'm just going to
pull up those charts. And also, Efim, what's your favorite index to follow? Are you a Dow Jones guy? Or are you an S&P 500? You're a Russell Midcap? What's your...
Yeah, it really depends on the period. It just happens to be now. that the IJJ and the smaller cap names, like in the Russell, are doing better. There are, but the Dow has a few names in there, that could carry it up, but it's lofty, and I feel that there's more risk trading in those areas than just sticking to mid cap value. So the IJJ is pretty much follows the mid cap space. So I think that would be a pretty good pilot light indicator of what's going on in this market. Anyways, to answer your question about LNG, the breakout point. Now, there's a lot of little trading points in here. I don't want to talk about that because I want to, if somebody really wants to, know when this thing is going to just rock. I think anytime after January the 2nd, okay, I'm not saying it's on that date. It could be anytime after. If it breaks out above $49, I know that's a long distance away, but it doesn't take much to do that. This is a very high beta stock, and all it takes is a breakout on a short-term time frame. So if somebody was to look at, let's say, a 60-minute chart, and they start getting buy signals on breakouts within the 60-minute chart, so likely that 44.03, that high on December 12th, that could be, the area that stages a move into the next area of resistance, which would be somewhere between the 46 and 48 area. But as a long-term investor, breaking the 49 handle in my work shows that the upside, the first push up would be 58, and then the secondary target would be 91. And I think that would be a hold for at least 6 to 12 to maybe 18 months. So I think this has a lot of legs.
All right, we're going to schedule you in as the first guest in 2018, and when you come on the show, where will the Dow Jones Industrial be trading? We went off the board at 19,762. Everybody's worried about 20,000. Will that just be a minor resistance point? Will it be at 21 or 22, or what's your prediction here for the full year?
Okay, well, here's the difficult part in doing that. The methodology that I use is based on the concept of chaos theory, and that basically means that there are certain areas in the market, in price and time, where you could go into certain states where very, very small changes could actually cause feedback effects that make it impossible to say what's actually going to happen at a specific date in the future, as opposed to a trend that could lead up to a date. So I would be comfortable in saying that in the first quarter of the year, so going into the late spring, that there's especially in the banking area and in the energy area and some of these other areas I discussed in the mid cap space, we'll have a tremendous surge. There could be some volatility in between there, but there should be a pretty significant surge up. After that, I think you really got to play it, week to week, month to month, and really put on the trading hat, because it's going to be next to impossible to actually say that, hey, after we get this crazy run up, are we not going to have some crazy volatility kick in? And I think we are. So it's going to be a much more volatile year this year. But I think the opportunity for traders to make money is going to be greater this year, just because a lot of the stocks that have been crushed are finally breaking out. And when the larger cap stocks that are way overvalued right now get hit at some point after, let's say the end of the first quarter, then I think some of these value stocks, even though they'll come down, they'll come down less and they'll recover faster than some of the other stocks. So I think I'd rather just come back on the show sometime after the end of the first quarter and then discuss that from there.
All right, that sounds great. Efim Hoffman, CEO and founder of Running Alpha Capital Markets Intelligence. He's given us some good predictions. We'll keep an eye on some of these. Thanks a lot. We'll speak to you again at the end of the first quarter.
Thank you very much.
All right, it is now 8:35. We're going to take our second break of the day, and we're going to bring in Nick Shaheen, options expert and the author of Create Income with Option Spreads. We'll be right back with Nick.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Spencer Israel, and we have our usual Tuesday guest on the line. That's Nick Shaheen. He's an options expert and the author of Create Income with Option Spreads. Nick, how you doing on the first trading day of the year?
I'm doing great. Better than my son. He broke his tibia on Friday night, so he's surfing the couch for the next week, unfortunately, for his last week of the break. But the year should be good.
How do you do that?
Well, he's almost 6 feet tall at 15, and his body still thinks he's about 5'2". So he still does monkeying around like a younger kid, and he should pay attention to his size and mass. So he fell on his leg, and he just ended up hitting a corner on the shin.
All right. Well, hope he gets better soon. Let's wrap up 2016 here on the first trading day of the new year. Kind of, I guess, a light volume sell-off at the end of the year. So people just getting a little nervous ahead of the change in the year.
I'm not sure it's light volume. If I looked correctly, I mean, the last day there's some heavy volumes. I think that especially on the Qs. So just maybe tax selling. Everybody expected the tax selling to happen this week. Maybe there was some swapping of losses and offsetting. I don't know what was going on, but it was definitely not an appetite to sustain the greens. Every pop in the morning that we had, the pre-open got sold off. We were lucky enough to play some swings lower with some puts, but if you're holding puts into today, you're going to be hurting in the morning. But also, which carries through, what's going to happen for the rest of the week? Are they going to be able to sustain the rally? If you remember, everybody was obsessed with Dow 20,000, so how it should be the benchmark here, right? So if that was the case, and we came within like 0.06% of it, tells me that they really tried. They put all into it, and I should see how they continue from here towards that goal.
All right, the driver in the market seems to be the rally in crude oil, trading up $1.20 here at 54.92. Renewed optimism here for the countries in OPEC actually sticking to these oil production cuts. What else? I mean, do you see a factor to get this market up? S&P's up 14 points here, even though we faded a little bit. Talk about the key drivers today and for the new year.
It's hard to see the price action of the market itself without looking at the 2.5 up in oil. So the technical target in oil is about 58 to 60, has been for me for a while, but it's like unfolding in slow motion. So this is the end all be all as far as spark to get us there. So I want to see if they're going to get there, if there are going to be some cheaters that are going to pop out. Now seems to be consensus that this time they're not going to cheat. I say there are too many players in the game, so somebody's about to cheat. So I wouldn't short it. I would have gone long it via credit put spreads via the USO or something like that, because it does have a put below it, right? Because nobody's going to sell oil down to the 50s or low 50s or into the 40s when you have such an exuberance expectation. So I wouldn't short it so tightly, because they want to get higher, and if we don't see evidence of cheating, it will continue to be a driver. But not as much as it was, say, in last February, when every tick in oil was like the market's going bonkers over it.
All right, you gave us a nice looking chart here of the S&P 500. I'll put this up on the screen here. Trump.
One thing about that chart, if you look at those two white, funky-looking arcs, they're identical in size. So I just trying to show the duration of the last, surprise from 2016 was Brexit. That first arc on the left was the Brexit. The second one was the Trumpeteers. So not to say that they're going to behave the same, but just to give you scope, comparing the last, I guess I should have done a third one and put it around the February low, just to give you an idea of what happened in a period of months and compare it with like an eyeball view of it.
And what is that technical formation you have there? Is that the Nick?
Nothing.
Is that the Nick arc?
That's just an arc, and I clone it. So, I wanted to show it the scope without interfering with the actual chart itself, so I put it outside like that. It kind of like gives you a visual. I told you I like to draw with a crayon rather than I'm not a technical analyst. Those guys spend their lifetime studying charts tick by tick. I don't do that. I just look at it and see what works for me, and this kind of stuff works for me.
All right, so you like to focus on the fundamentals, and we have a new administration coming in a few weeks here. What are going to be, some of the fundamentals that you'll be looking at here early in January and through the remainder of the year?
Well, here's how I balance things out. Fundamentally, I'm not too excited as everybody else was when the Trump thing happened. However, there are a lot of names that show great fundamentals. So if I wanted to go long, quote, the market, I would rather at this level, I would rather choose names I trust. Like I trust Google, Facebook, Apple, Amazon for the long term. Apple waning. Amazon will surprise because, quote, it's a frothy name, but man, it delivers. Until if Bezos leaves, then I'll start worrying about it. But that company delivers. So if instead of going long the market with everybody's exuberance, I'd rather pick and choose names that I can trust, because I know if Apple falls to X, I know there'll be buyers at this level, at that level, at this level, and then I choose my entry point. Where do I want to be? And by the way, to choose the entry point, we've talked about it. You can just either sell puts at that level, the way I told you to do Twitter instead of you crying about it today. or
I'm like Nick. I went flat at the end of the year. I am going to be an unbiased trader in Twitter this year.
There you go. So, you pick your entry points and you sell risk there. I don't short these names. I'd rather balance them out by shorting the index, for example, via a cautious credit call spread out in time. So that's how I'm going to balance my book. Picked a few names to try to be positive about them, especially through the earnings season. And maybe to balance it out, if you want to balance it out, I would sell some credit call spreads above here. Leave some room for error. I'm not going to, lock horns with the market right here. And then, whoa, check that out. Bull and locking horns. I just made that up on the fly. So it's not so much catching the market move, rather than instead, I'd rather catch a few good names I can trust.
All right, big expectations for interest rates going up this year. Big move in the financials since the election here, and you've had a quiet consolidation phase here. You can take a look at a stock, or we're looking at the XLF here. I mean, is it just consolidation phase for another rocket ship higher here, or you're looking for more of a pullback in something like the XLF before you get interested?
Boy, the XLF technically sure needed the bounce here short term, right? On Friday, it looked like a gooseneck that was about to let go. But I can imagine this morning they're trading higher. If I wanted to short the market, why on earth would we want to pick on the one that's rallying the hardest? I'd rather pick on something like Caterpillar rather than this one. But I shouldn't mention Caterpillar. I should mention like the industrials and things that are actually going to need growth. So that you can argue for the XLF for banks that they've been so depressed for so long. I can buy that argument that they have so much to go to catch up. Indeed, if you pick out a multi-decade chart, you'll probably see that they're coming back to where they were then. So investing for the long term didn't work so much for them. Unless you want to be 150 years old. But so instead of picking on them, I'd rather pick on somebody else. So if you're chasing if a predator is chasing a herd, they probably pick the weaker members of the herd to chase, as opposed to the gazelle that's leaping over every fence they see. Why pick a fight with them? I picked a fight with them, and I've lost a couple of times. I've won one time, so I'm a little red in it, just for the little lottos. But it's not the right thing to do with a lot of money, in my opinion.
All right, so you're talking about, like you mentioned, cat and deer here, and looking at the charts of these. Yeah, I mean, I don't know, Nick. I don't know if you're really hopping into the right sandbox here. I mean, these stocks have had a pretty nice run. They have pulled back off the highs here, but with all the talk about the infrastructure and what Trump's going to do protecting U.S. companies here, are cat and deer really the ones you want to pick on?
No, I didn't pick on deer. I mentioned the actual deer running. I did say cat, and then I backtracked and said the basket itself. So, yeah, I'm not a big believer that Trump is going to actually build everything he said he's going to build. In fact, didn't he back out of the wall already? So, if I wanted to short something, I think they are more extended than the financials. That was probably the context I was going for there. It's not a conviction short where I'm going to lay all my money on it. But if I wanted to pick a debit put spread in it, which I believe I have one in it, and it was up on Friday. So if it's flat today, maybe I'll reconvene and see if I want to peel it off for a no-go trade. But it was a small debit put spread for cat, and it has time on it, so I'm not rushed. That's the beauty about it. You and I have discussed this before, that if you think there's a good move going to happen and I want to catch it with a spread, I'd rather give it time, especially if the spread is close to the money, because it costs the same for this week, next week, the week after, a month from now. The spreads at the money cost about the same. It's always about half the width of the spread, so why wouldn't I give myself more time?
All right, and you mentioned some of the high flyers there, the FANG stocks, which didn't have the greatest year last year. Priceline, well, interesting chart here in Priceline. Had that nice run up here, 1,600.93. Boy, you talk about whole numbers. We've had a nice pullback here to just above the 1,450 area here. Looking like anything you're interested here in Priceline?
Priceline needed a bounce. What's it doing early this morning? I haven't checked, but technically it was lower highs, bouncing on a floorboard. You want that floorboard to hold, else it becomes some sort of a trap door. It invites more sellers for a little more red. So it's a great company. If they punish it, I will go long it. I did not short it at the highs because the markets were going out of control, but I probably should have. So it's one I would watch. And I kind of hope they punish it a little more in order to pick up a few credit puts president, but it didn't happen. But there's time, and I'll post a chart in there to show you what I'm looking at as far as levels. But technically, it needed a bounce. So, and it's a Momo, and it runs fast, so you don't want to get in too early with that. Sometimes if you wait too long, you miss it, but it's still better than getting in too early because it can punish you hard.
All right, just put the Priceline chart up there. Also, though, I'm looking at your FANG chart here, and kind of interesting. You have Facebook, Amazon, Baba, Google. Tell us about your annotated.
That's because
FANG.
he changed the FANG to Fa. Alibaba is the A. So he swapped Netflix, I believe. Not sure why he puked on Netflix on that one. But this is a good bunch. I don't know about Alibaba, but I do know about Facebook, Amazon, and Google. And I trust those three companies. If I, short of the markets correcting like completely, those three alone should not correct heavily. So even if they correct and so holding sold puts or credit put spread, I would probably be willing to own the stock in the long term. So worst case scenario, I'll be put the stock, no big deal. They have shown the inability to participate, but given that if you believe in the reversion to the mean, they should have some upside coming to them. And I can't imagine they're going to completely disappoint in the earnings. So there might be some exuberance there, or maybe ahead of the earnings too. So technically they're not very pretty, but fundamentally they are, which is pretty much the opposite of everything else that I see right now.
All right, Ed Parker saying, hey, Nick, didn't Kramer have a great year? I'm not sure.
I don't know.
I
You
don't
tell
know.
me. I don't track his. In fact, somebody tweeted his portfolio to me, and it was like up 3%. So I don't know. I'm not sure if it's his portfolio or is it the picks that he had in 2015 as winners, and they washed over the picks and they said 3%. But they volunteered the chart. I don't track his trades.
Question here coming out of the chat, and I think it maybe depends on the platform you're on. But Nick, do I need a telephone to exercise a call option?
A telephone to exercise a call option? I don't think so. You can, if you have it in your portfolio, you can just probably right click on it and it'll come up with one of the options. But check with your broker on that.
Yeah, okay. All right, Nick. Any final words here for I guess the first trading day of 2017, as well as for the remainder of the year?
This week, I want to see the appetite to hold the green. So, okay, we've had a huge 20-point rally showing in the morning. What are we going to do? And then put it in relation to last week's prices to see how they perform. Are we setting higher lows? And are we breaking the lower high trend that we had for the last few days? Those are important things for momentum. I want to see where the consensus is and how we're performing relative to that consensus.
All right, we've been on the line with Nick Shaheen. He's the author of Create Income with Option Spread, our usually Tuesday guest. He's made a lot of great calls on the show. Nick, thanks a lot. We'll talk to you again soon.
Thank you very much. Looking forward to it.
All right, we got some NVIDIA action going on here.
I was going to ask you, do we have to bring that up? I was going to bring it up earlier, but it is the new year, new us, new show. Are we still going to bring up NVIDIA every 5 minutes? What's going on?
Well, Spencer, do you remember the day that we were bringing it up and we were quoting it was the actual day that it put its top in?
Yeah.
That was the day.
That was like Thursday.
And I offered, you know how I do lunch bets with Dennis? I actually offered you 2 lunch opportunities if you could guess NVIDIA within $1.
And I couldn't.
And you couldn't. Interesting here. This thing was all over the map here in pre-market trading. Also, that stock was identified as Sean Udall as the short of the year. He was hoping for one more blowout quarter here, but I'll tell you, I'll give you a key level to keep an eye on the downside here. 102.80, I believe, was the low of the move when just 2 days after Andrew Left came on, so that's 102.80. You got a little bit over, now right to the 50% retracement. That was something I was keeping an eye on. You basically had a 17-point move, 8.5, 110.80. That took you to 111.30. 111.92 was the high of the move, and now we're coming down. We'll see what happens at 102.80. Love to see it in triple digits. Not sure that's going to happen today.
I want to update us on it's a busy morning in the auto sector. So we had Trump tweeting about GM at about 7:30. GM sent out a statement a few minutes ago. This is their statement that they sent now to us and a few places by now. It's been out there, but General Motors manufactures the Chevy Cruze sedan in Lordstown, Ohio. All Chevy Cruze sedans sold in the U.S. are built in GM's assembly plant in Lordstown, Ohio. GM builds the Chevy Cruze hatchback for global markets in Mexico with a small number sold in the U.S. That is their response to Trump's tweet from about an hour ago saying GM is sending Mexican-made model of the Chevy Cruze to U.S. car dealers tax-free across the border, make in the USA or pay a big border tax. So we got that on one hand. On the other hand, we do have a press conference coming in at 11 a.m. Eastern from Ford, from their Flat Rock assembly plant, which is the plant that caught fire, if you recall, a few months ago. I think it was in June or July. So a busy morning in the autos in GM and Ford.
And Ford, let's take a look at that. Had that nice pop just after the election, 13.25 back down at the $12 area. I like that it filled the gap here from that trading action in November. Just give it 3, 4, 5 days to make a low in the same area and see if we can get a little pop off that.
Couple other ratings to discuss this morning. We have Verizon, City upgrading Verizon from neutral to buy. They're hiking the price target up as well from $55 to $60. They're setting an opportunity for multiple expansion, given their prospects to improve free cash flow from a combination of expanding its addressable market for revenue and the M&A that, of course, we know Verizon has done the past year or so.
So they're upgrading it now, huh? Where were they when the thing went from 57 to 46 and now it hitting this rally? Folks, I'm staying away from this upgrade here. If maybe it's a fade and an upgrade. You had multiple highs at the $54 area. Pre-market high comes in. Is that at that level as well? Also, are interest rates really going to go up? What will that do to the utility stocks here? So, not touching this one. And Spencer, should we start a Trump tweet index? Basically, what the stock does on his initial tweet, as you had in GM, they hit it. You had the same thing in Boeing, and coming back now. Should that? Could we be the first one to have a
I don't know if we'd be the first one.
TTI Trump tweet index?
But what would the index what would be in the index?
What stocks that he tweets about? Like Boeing. Well, starting out with GM here, what it did on the initial move, and I guess where it's at. No,
I'll check it out. I'll look into it. A couple of movie makers also this morning. One, we had Disney catching an upgrade at Evercore ISI, but also Fox, 21st Century Fox upgraded to outperform at Wells Fargo. Do want to note that 2016, for the second year in a row now, had the highest earning year in movie history. It broke the 2015 record. U.S. box office made $11.4 billion last year, and then I think they're projecting to break that again this year. So a good time to be in the movie business, and Evercore and Wells Fargo getting in on the action this morning.
And Disney? Who's giving you the Disney upgrade there?
Disney, where'd I get that from? Evercore ISI. I'm seeing that at CNBC.
All right. Wow. You tell me what you see on the chart here, sticking out like a sore thumb. In Disney is this 106 area, right near a whole number just above it. I see three highs between 0591 and 0626 on the 19th, 20th, and 21st. So looking at the 106, till we get another breakout above that 106 level, I don't know. More of a seller than a buyer here off the upgrade.
Anything in the chat? Nope. Okay, then one more we'll get to. We got Xerox this morning. Also, JP Morgan upgrading Xerox from neutral to overweight. They're setting a spin-off of their conduit business. And, of course, Xerox shares had we can say a rough 2016. We can say that.
I mean, they're still covering this stock. I mean, we didn't spend much on 3D printers. Maybe we'll do a little 3D printing special.
Haven't done that in a while.
No.
What happened in that sector?
I don't know. Xerox here, I just can't get it. I'm not even going to comment on that one. I'm not putting that in my portfolio. How about Triple D, Dennis Initials? What happened during the year for Triple D? Let's just take a look at it. Not much. Kind of dead money there. But got some notes here from Efim Hoffman in the chat. If you want to look at the chemical activity barometer, Efim likes Xerox, a strong buy on his work. 8:58, Spencer, you want to wrap up the first show of the year?
Yep. The first show of the year. If you missed any part of our interviews with Nick and Efim, you can catch the whole thing again. It's on YouTube in a few minutes after the show. Also, the podcast is posted on iTunes, SoundCloud, and Stitcher. Should be in about an hour or so. Quick reminder, check out Benzinga Pro. It's a new year. Get your year off with a Benzinga Pro subscription if you don't have it already, or you can get a free 2-week trial. Just go to pro.benzinga.com. You can also call us up at 313-723-2000. It's Benzinga Pro. It's Benzinga's real-time news platform. It's great if you want to stay on top of the markets. You want to see what's moving in pre-market and after hours. We have analysts posting headlines pretty much from 5 a.m. through like 6 p.m. every single day. Again, to get that free 2-week trial, go to pro.benzinga.com or call us up. Please always remember that all the information, material, and content from our show is for informational purposes only, not meant to be investing advice. Okay, everybody, have a good rest of your day, and We'll be back with you folks on Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.